Hello and welcome to First Filing. In today's video, we are going to understand about HRA. HRA, that is House Rent Allowance, is a benefit offered to employees who live in rental accommodation. It is meant to ease the financial burden of paying rent. The amount of HRA provided depends on various factors such as salary, city of residence, and company policies. Components of HRA. The actual amount of HRA received depends on number 1. Basic salary. HRA is usually a percentage of basic salary. Number 2. City of residence. If the employee resides in a metro city such as Delhi, Mumbai, Chennai, Kolkata, they are eligible for a higher exemption. Rent paid. HRA exemption is based on the actual rent paid by the employee. Company policy. Different companies had different percentage for HRA as a part of their salary. Tax exemption on HRA. HRA is partially exempt from tax under Section 10, 18A. The exemption is calculated as the least of the following three amounts. Number 1. Actual HRA received from the employer. Number 2. 50% of basic salary for metro cities or 40% of basic salary for non-metro cities. Number 3. Rent paid minus 10% of basic salary, where basic salary refers to basic plus DA plus commission on sale at a fixed rate. Let's understand with an example. Suppose the basic salary is Rs 15,000, HRA received is Rs 20,000, rent paid is Rs 15,000, and city is a non-metro city. Solution. Actual HRA received equals to Rs 20,000. 40% of basic salary, non-metro city, equals to 40% of 50,000 equals to Rs 20,000. Rent paid minus 10% of basic salary equals to 15,000 minus 5,000, that is Rs 10,000. The least of the three is Rs 10,000, which will be exempt from the tax. The remaining 10,000, that is Rs 20,000 of HRA received minus Rs 10,000, will be taxable. HRA exemption condition. To claim HRA exemption, the employee must be living in a rented house. The rent should be paid to a landlord, not parents, unless they declare rental income. Rent receipts must be submitted to the employer for exemption. If annual rent paid exceeds Rs 1 lakh, the landlord's PAN must be provided. Employees cannot claim HRA exemption if they live in their own house. Documents required for HRA. To claim HRA exemption, employees need to provide Number 1. Rent receipts, mandatory if HRA exemption is claimed. Number 2. Rental agreement, if rent is above Rs 50,000 per month. Number 3. Landlord's PAN, if rent exceeds Rs 1 lakh per year. Number 4. Bank transaction proof, if required by the employer or tax authorities. HRA under the old tax regime. In the old tax regime, HRA is partially exempt from the tax under Section 10 of 13A of the Income Tax Act, which means that HRA exemption reduces taxable salary income. But in the new tax regime, Section 115 BAC, all exemption and deductions, including HRA, are removed in exchange for lower tax rates, which means that there will be no HRA deductions from the taxable income. I hope you gained some insightful knowledge from this video. Kindly follow First Filing for such insightful videos.